Oh, Robert, you're on the presenter slide.
Everybody, thank you for joining the ACA Small Business Bootcamp for this Tuesday, March 1st. We're excited to have everybody with us. I'm Robert Theobald, Small Business Ombudsman and Vice President of Small Business Services. And we've got a great lineup for you today. As we like to do, we like to start by first thanking all our community partners. We cannot do the bootcamp sessions without them, their time, their effort, and their expertise. So we're very grateful for them. Those not familiar, the Small Business Bootcamp is designed to help support small businesses as they prepare, plan, and grow. It's a statewide initiative supported by all of our community partners. It is a content library and is a workshop series. So we're going to talk a little bit about those. The normal bootcamp piece is every Tuesday morning, 9 a.m. We provide these webinars on the various topics. And we've been doing these workshops, these boot camps for almost 2 years now. And so starting in 2022, we decided to scale back on the number of webinars each week and include some monthly workshops. So we recently had a workshop on access to capital with the Phoenix Business Journal, Wells Fargo, Gallagher and Kennedy, REDW, and the SBDCs. It was a great workshop. And we've got another one coming up at the end of this month. We'll have some information out soon on that, but it is with the Department of Revenue, talking about small business taxes as you prepare your taxes for this year. Maybe a very beneficial workshop to understand some of the things you may need to know as a small business regarding taxes. But because we have been doing the boot camp for so long, we've created a great content library. We record all of our webinars and workshops, and we have those listed on our website. And you can sort. You see the little phone on the screen. It shows the different categories in which you can sort the content library and find the presentations that you're looking for that will help your business. We also list on the website the most recent webinars and their recordings. So if you can't make it on a specific Tuesday, you can go in on Tuesday afternoon, Wednesday, Thursday, some other time and find that session that you missed and review it. The recording along with the slide deck and any other materials that our presenter provided. Great resource, and you can share that with friends. There's no cost to go in and review and access the content library. The ACA also has a number of different programs to help support small businesses. We have our Small Business Services, our Workforce Division, and our Arizona MEP, our Manufacturing Extension Partnership. From these programs, we also have our small business checklist, and this is a great resource for those entrepreneurs looking to start or grow their business, and it helps you identify the commonly requested licensing, registration, and compliance needs at the local, state, and federal levels. Now, transitioning a little bit to some business updates, just want to share a few resources with you. We're going to share these in the chat. So keep an eye on the links for them will be in the chat. But we like to point out to the Small Business Administration, the SBA, their website has a lot of great information as you're looking to start and grow your business. Information if you're looking for funding and lending to grow your business. So it's a great website to be aware of. We're also going to list some links to business support programs such as the Small Business Development Centers, SCORE, and the Women's Business Centers. Then a reminder for PPP loan forgiveness. We haven't talked about this a whole lot with presentations in the past few months, but we do have a webinar boot camp coming up in a couple of weeks on PPP loan forgiveness. We were looking at the calendar, and most of the, if not all the PPP loans from 2020 are due to apply for forgiveness, but even some of the 2021 PPP loans are now hitting that mark where you need to apply for loan forgiveness. And we just want to make sure that everybody has the information they need to apply for that forgiveness. And then we also want to make a note about the Merge AZ Fast Grant. This is a grant program that is competitive, but is available for some businesses. So please take a look at that. So with that, we want to jump in to look at the upcoming sessions we have. We have a great presentation today on the employee retention credit. And then next week, we have the tax credits you didn't realize you can get, which is focusing on the R&D tax credit program. Now, don't let the R&D tax credit scare you away. There's a lot of businesses, a lot of you out there can qualify for this tax credit program. And so that's why we're doing on here, because it's more available than what some people believe is the typical R&D from a tech or manufacturer. So a lot of the small businesses can qualify, so we want to bring that information to you. Then on Tuesday, March 15th, we're going to have our PPP loan forgiveness. And then we're going to jump into some operational pieces for your business, starting with the business model canvas on March 22nd. And this is the business model canvas is something you should do at least once a year, if not a couple times. Very simple program, but we've got a great presenter for that, and Tom Argero from the North Phoenix Chamber of Commerce. Excuse us, our description here is a little off, but we'll get that fixed. And then on Tuesday, March 29th, we're having a new presenter talk about leveraging influencer marketing to drive your business results. Influencer marketing is something that's growing quite a bit, and we want to touch on that to help everybody. So exciting upcoming session. So I hope you can join us on those Tuesdays. But with that, we'll jump into today's session. We've got one of our favorite presenters back with us, Carrie Ann Todd, principal in accounting and insurance at Beach Fleischman. Carrie Ann was a huge help for us during the start of the pandemic and throughout, with updates on PPP and EIDL and ERC and other tax programs. So we are excited to have her back to touch on this topic. So with that, Carrie Ann, I'm gonna go ahead and turn the time over to you and let you get started.
All right, thanks, Robert. And thanks to Robert and Faith for having me back. It's been a while since last summer, which I think is a good thing. If you don't need me, it means we're deep into recovery, right? And that's always a good thing. So we'll start with a presentation today. Let's see, make sure I get my slide deck going here. All right, so this presentation is based on today, and I'm going to give a plug for the content library that Robert mentioned. Today we're going to talk about employee retention credits, pretty high level. But if you want like details on the calculations, I've done these business boot camps at a more detailed level during 2021. So if you go back into that content library and find something from last summer, I believe, or even maybe last spring, late spring, there'll be a more detailed like actual math, dig into the calculation, that kind of stuff. So there's a lot of great stuff in that content library, for any topic, especially ERC or PPP. You can dig back in that resource and get more information if you don't get everything you want today. Okay, so the employee retention credit. When the employee retention credit was established, it was established by the CARES Act. Okay, and we're about almost 2 years out from the CARES Act. And originally, the CARES Act said you can get one or the other, PPP or ERC. You can't get both. And then at the end of 2020, the Congress came in and changed the law and said, nope, we changed our minds. You can get the ERC even if you got a PPP loan. And so that's when a lot of businesses then became eligible for the ERC that originally were not, because they took the PPP loan, right? Because that was fast money. The ERC takes longer to get. You have to apply for it. You can only do it quarterly, whatever. So that's kind of how we ended up where we are now, which is you can take advantage of both programs, PPP and ERC. The full length of the ERC program is March 13th, 2020. That is the first date in the CARES Act that was established. And then it was shut down at the end of September 2021 by the Infrastructure Act that was passed last October, November-ish. They decided for lots of reasons to go ahead and shut that program down. But it does not mean that you cannot take advantage of it. It just means you have to file for it retroactively if you're eligible. So the window is not closed on that program. High level, the 2020 credit is 50% of eligible wages, and the 2021 credit is 70% of eligible wages. And we're going to really focus on eligibility today, figuring out who is eligible. And then once you determine whether or not you're eligible, then you can, look to a consultant, look to your CPA, whatever, to work through the actual math. So an important concept in all of this ERC stuff is that there's a reference period for several of the metrics. Okay, and everything references back to 2019. Why? 2019 is the last time we were normal. The new normal, I don't know when that's going to be, but 2019 is the last time we were normal. So a lot of the metrics look back at that 2019 year to see what size was your business, how many employees did you normally have, what were your gross revenues normally. So you have to have really good numbers on 2019 in order to really decide whether or not you're eligible in 2020 or 2021. So I highlighted them in this beautiful turquoise color on all the slides so that you're super clear on when you have to reference back to 2019, okay? All right, my slides also have a highlight for yellow when we're talking about 2021. So for example, before I talk about this slide, you can see at the top, it says ERC 2020 eligibility. Next slide says ERC 2021 eligibility, and it's highlighted in yellow. So we're going to talk about both years kind of at the same time, but the slides are differentiated so you know what year we're talking about. The concepts are in general the same. It's just some of the measurement numbers change, but conceptually, a lot of the things are the same. So there's two ways to be eligible for the ERC, okay? And it's an or, it is not an and. So I want you to see that the or, it's highlighted because it's a critical thing to understand is that you have to be eligible one way or the other, not both, okay? So the first one is that business had operations that were partially suspended during any calendar quarter in 2020 due to government COVID-related orders. The credit only applies to wages paid during the portion of the quarter that the business is suspended, not the entire quarter. What does that mean? I'll give you two examples. Let's talk about a dentist. So in 2020, your normal dentist that you go to get cleanings, right? He or she was told you have to shut down. The only thing you can do is emergency services, emergency root canal, emergency tooth replacement, getting your tooth knocked out, whatever. You can only do emergency things. So the majority of their business was shut down, okay? And it was shut down for about 6 weeks. So dentists were able to take the ERC for that 6-week period on wages that were paid during that 6-week period, okay? That's one example. The easiest example to understand is a restaurant, okay? On March 19th, Governor Ducey signed an order, March 19th of 2020, that says all restaurants have to shut down to takeout only, right? And then at a certain point later, they brought back dine-in, but only at 25%. And then they brought back dine-in at 50%. And then those restrictions stayed in place until March 6th of 2021. So restaurants were prohibited by government order signed by Governor Ducey saying you cannot operate at full capacity, okay? That's a partial suspension. It has to be directly related to a government order. If your business went down because of the pandemic indirectly, okay, let's say maybe you are an auto shop and you were deemed essential, so you were able to keep fixing cars, but less cars needed to be fixed because people were driving less, that's not a partial suspension, okay? Because the government order did not specifically close or restrict your business. So I want to make sure we understand the clarity between those two types of things. Okay, so that's a partial suspension. Now we're going to flip to the or, okay? The other way you can be eligible is if you experienced a significant decline in gross receipts during any quarter in 2019. Okay, and you're considered to have a decline in gross receipts in 2020 if compared to 2019, that same quarter, your gross receipts are less than 50% of your 2019 receipts. Okay, and you basically stay eligible until your gross receipts hop back over 80%. And I've got a demonstration of this math in a couple more slides. So you look at your gross receipts by quarter, and it has to be by calendar quarter. It cannot be annually. And the reason for that is because this is a payroll tax credit, and you're going to file for this on a 941. And 941s are filed quarterly. You report quarterly wages, pay quarterly taxes. So this gross receipts test has to be done at the quarter. It's very specific for that reason. Okay, let's talk about 2021 eligibility. The first bullet point is the same. Okay, same reason, same metric, same everything. If you had a partial shutdown, okay, and it says first or second quarter, it should say first, second, or third quarter. So sorry about that. If during one of those 3 quarters you were shut down or suspended by the government, by government order, you would qualify under that partial suspension. That one gets harder to qualify for in 2021 because a lot of the restrictions began to be lifted. Like I mentioned, the restaurant restriction on 50% dining was lifted on March 6th of 2021. And then a lot of restrictions came off after that. So I've seen less of this in 2021 and more of the gross receipts. Why is that? Because it's a more generous test for 2021. So flipping to the gross receipts test for 2021, you're considered to have a significant decline if any one of your revenues for any quarter in 2021 compared to 2019, remember we're comparing to our base year when things were normal, if your gross receipts are less than 80% of what they were in 2019. Okay, so that's an easier test than the 50% test that we had in 2020. So a lot more businesses are eligible for the ERC in 2021 than were eligible in 2020. Okay, if you qualify under the partial shutdown test, you need to have in your documentation these specific government orders that cause you to be fully or partially shut down. All of Governor Ducey's orders are on the internet. You just have to Google Governor Ducey executive orders and it pulls up the full list. And you can kind of look for them based on date. They're in chronological order, so you can scroll down and find the ones you're looking for. Only wages and allocable health costs during the shutdown period are eligible for the ERC when you have the partial shutdown. So a partial shutdown is not going to be a whole quarter because none of the government orders, trust me, started at the beginning of a quarter and ended at the end of a quarter. So if you're looking at the partial shutdown test, it's going to be like a random period. Like for restaurants, it would be March 19th, 2020 through say March 6th of 2021. Okay. And it's just the wages during that period. You can't just extend it to the end of the quarter. That's not how the shutdown works. For the gross receipts test, it is quarter by quarter, right? Because we're looking at gross receipts for a quarter. So if you're eligible for that quarter, it's all the wages paid in that quarter that are potentially eligible. Okay. So if you're looking at the gross receipts test, what you need to do is isolate your quarterly revenues for 2019, 2020, and 2021. Get those all in order, and then you can easily figure out the math and whether or not you qualify. As far as the method of accounting, it's easiest to use whatever method of accounting you use for internal record keeping, right? Because you already have that available. You could also use your income tax method of accounting. But if that's a lot different than your internal, then you'd have to do quarterly conversions, and that's a lot of work. So it's generally easier to do what you use for internal month-to-month accounting. For 2021 only, there's what I call the look back rule. Okay, in the IRS notice, it's called the alternative quarter election, which is much more eloquent. But for me, I call it the look back rule because that's basically what we're doing. We're looking back a quarter. And the look back rule says that if you don't meet the test for this quarter, but if you did meet it for last quarter, then you're eligible for this quarter. Okay. And let's look at some slides on how this all actually works on gross receipts. So this is an example for 2020. And remember, our metric for 2020 is that your gross receipts have to be less than 50% of your gross receipts in 2019. So you can see that we demonstrate that here in example 1. for quarter 2, their gross receipts fell below 50%, and they stayed below 50% all the way through quarter 4. And so this business would be eligible for quarters 2, 3, and 4. Okay. In our example 2, their gross receipts fell below 50% in Q2. You can see the relationship is 42%. They went above 80% in Q3, but that quarter stays eligible under the rules. And then the second quarter, they were way above 80%. So that's not eligible. Okay. And I didn't want to read the full technical description of how it's the quarter after the quarter that you exceed 80%, but this is kind of a demonstration of how that works. All the ERC stuff is really technical. And so if you feel like it's overwhelming or confusing, it's okay. You have a lot of company. It is overwhelming and confusing. I just have the benefit of having a 12-month head start on you in terms of learning about it. And I've spent a lot of my time over the last 12 months talking about ERC, learning about ERC, and doing these calculations. Okay, so here's a demonstration of the rule, the gross receipts test for 2021. And remember, our metric is your gross receipts have to be less than 80% of your gross receipts in 2019, okay? So in example 1, we have a Q1 and Q2. They're both eligible because the relationship is less than 80% for both quarters, okay? In example 2, I'm going to demonstrate the look back period rule, or look back rule, or like they call it the alternative quarter election. You can see for quarter 1, they don't meet the test by itself because gross receipts were 90% of 19. But if you look at Q4, they're at 75%, which is below 80. So under the look back rule for 2021, Q1 is now an eligible quarter. And then Q2 is eligible of its own accord because it's below 80%. Okay, now be clear here, Q4 of 2020 is not eligible in this example. Because it doesn't pass the below 50% test. You'd have to look at Q4 on its own under the 2020 rules. So it doesn't become eligible under the 2021 rules. It just is it's a look back quarter for you to compare to see if you're eligible in 2021. And I know that's confusing. So hopefully the math here kind of demonstrates how that works. Okay. So once you determine which you're eligible, okay, which is half the battle, determining whether or not you're even eligible in the first place is half the battle, getting through all those metrics. Do I qualify? Do I not qualify? Blah, blah, blah. Okay. Then we have to determine what size your business was in 19. Okay. So there's this size metric, and I'll show you on the next couple slides why the size metric matters. So this size metric says, compute the number of full-time employees you had in 2019, okay? Remember, 2019 is our base period when everything was normal. You're only going to include employees who average more than 30 hours a week or who had 130 hours in a month. So if you have a part-time employee that works 20 hours a week, they don't even get counted at all. You only count the employees that were considered full-time, and you compute your average for the year. And so if you have a lot of part-time employees, this math actually works in your favor. I know of a restaurant group, and they have in their payroll, when they cut paychecks every other Friday, they're cutting 350 or more paychecks, right? But because of the nature of the restaurant industry, a lot of those people are part-time. So their average number of full-time employees is actually closer to 200. It's not 350 because of how this math works. So from this number, you're going to determine what size your business was in 2019 in terms of employees. So for 2020, if your number is 100 or less, you can use all the wages paid during the affected period, quarter, whatever. If your number is over 100, you can only take the credit on wages and healthcare costs paid to or for employees who were not working, okay? Literally paid while staying home and not providing services. And I know you're thinking, well, why would we do that? But we quickly forget that 2 years ago, that's what a lot of people did. At the end of March, coming up on 2 years on that, a lot of businesses were paying their employees even though they were at home quarantined, either by government order or because they were ill. And so this literally was a thing. And so only businesses that had more than 100 employees in 2019, remember that's our metric, can only take the credit on wages paid to people they paid to stay home. Okay, if you're under 100, you can take it on all the wages paid to everyone during that affected period or quarter. The calculation for 2021, I'm going to pop to the 2021 slide right quick, and then we'll come back. For 2021, that measurement moves up to 500. Okay, so for 2021, you could have had up to 500 employees in 2019, and now you're eligible to use all the wages. And then that the paying people to stay home while they're sick is only imposed on employers with more than 500 employees. Okay, so you can see how this becomes much more generous in 2021 because a lot more businesses fall into the under 500 category as opposed to the under 100 category. Okay. So for 2020, the credit is the first 50% of $10,000 in wages and allocable healthcare costs during the affected period or quarter paid to each eligible employee. So it's the first $10,000 for the whole time. So let's say you're a restaurant and you're eligible from March 19th through the end of 2020. Okay, the maximum credit you can take on someone is $5,000. They might have earned $10,000 in wages in Q2, or they might have earned $10,000 in wages, shortly into Q3. But that's where it stops. So that measurement period, it's a much less generous credit in 2020, I guess is my point, because the maximum credit is $5,000 per employee. Now, when you get to 2021, the credit is calculated by quarter. Okay, so you're going to look at each individual quarter that you're eligible, right? You have to go back and figure out what quarters or what periods you're eligible. But it's that period, and it's 70% of the first 10,000 in wages and healthcare costs paid during the affected period or quarter. And you compute it independently for each quarter. So the maximum credit for 2021 is $21,000 per employee. And so if you determine you're eligible for 2021, this credit can add up really quickly. So it makes a lot of sense to investigate whether or not you are eligible, because the dollars can be significant. And I know they're significant because I've helped companies calculate these credits, and some of them are in the millions of dollars. Some of them are in the thousands of dollars. It depends on the size of the company, right? But they can be very lucrative, even for a very small business. Okay, so there has to be restrictions, right? It's a government program, so it can't be that simple. So restriction number one, if you paid any wages under the FFCRA, and the FFCRA really came into play when it was put into place actually before the CARES Act, and it was a program that said you claim it on your 941 and the government basically would reimburse you for wages and all related payroll taxes for wages that you paid to someone who was staying home because they were actually sick with COVID, or they were caring for a loved one that had COVID or whatever. So you'll see that on your 941, it's like you had to segregate your 941 wages between regular and sick and family leave wages. So you can't double dip. So if you claimed FFCRA on someone's wages, you can't claim the ERC on those same wages, okay? Also, if you take advantage of the work opportunity credit, you cannot use those same wages for the ERC, okay? So there's a lot of double dip restrictions, which makes sense, right? Restriction number two, wages paid to relatives or family members generally do not qualify. And then also a more than 50% owner, you can't take it on them. So let's say I have a business and I own the whole thing, and I employ my husband, my 3 kids, and my grandkids, plus 20 other people, okay? I can't take the credit on myself, my husband, my children, or my grandkids, but I can take it on the 20 other people that are not related to me. So There's a link here to an FAQ that really explains in detail the related employee restrictions. But the gist of it is over 50% owners plus all their relatives. The only relatives that get excluded in the list are your ex-spouses and your ex-in-laws and anything that's considered an ex. Everyone else is still in. Okay, instruction number 3. Any wages used in the computation of the ERC are not eligible covered costs on the application for forgiveness of a PPP loan. Okay, well, for most of you, we're past that, right? You've already filed for forgiveness, I hope, on your PPP-1 loan for sure. Your PPP-2 loan, maybe you're in the process of filing forgiveness. All is not lost because you've already filed for forgiveness. But the math just gets harder because let's say you're eligible for all of 2020 and all 3 quarters in 2021. You have to really carve out, here's the wages I used on PPP. Here's what's left that's not used for PPP that qualifies for ERC. Okay. So, you know, if you've already filed for and received forgiveness, it's not too late. You can still claim this credit. You're just going to do more math than if you had done the calculations simultaneously. And it's not hard math, it's just really thinking about what's eligible and what's not eligible. Okay, restriction number 4. This one's kind of complex. So there's aggregation rules that affect parent, subsidiary, brother, sister groups, or a combined group. Okay, what does this mean? Let's say I have 4 businesses, okay? And I'm 100% owner of 2 of them, and I'm a 70% owner of the other 2. I can't look at each one of my businesses in isolation, okay? I can't say, okay, this business does or does not meet all the tests to qualify for ERC, this business, blah, blah, blah. If I have a bunch of businesses, I've got to add them together, okay? So I've got to take for the gross revenue test, I have to take the revenues of all 4 businesses, add them together, compare them to the revenues in 2019 all together. So if you have multiple businesses, or it could be as simple even as, let's say there's 2 businesses, I own 25% of one and 75% of the other, and Robert owns the next one, but in the opposite ownership, those would probably have to be combined as well, because together we basically control those 2 companies. So the aggregation rules are complex. So if you have more than one business, I would definitely consult a CPA to make sure you're following these rules correctly, because they're not simple, unfortunately. Okay, so we've decided whether or not we're eligible, right? We understand all the restrictions. Now what do we do? Okay, you file a Form 941X to claim the credit. Okay, 941X is an amended 941. 941 is the form you file quarterly to report and pay. You don't necessarily pay your payroll taxes, right? You pay those every time you do payroll, but you're reporting the payroll taxes that you owe, and you're reporting that the deposits that you've made. Okay, so how long can you do this? Okay, you can file an amended 941 up to 3 years after you filed the original. Okay, so if you look back, and that's a very simple explanation of the rule, but we'll just keep it simple for now. Let's say you determine that you're eligible for Q2 of 2020, okay? The 941 for Q2 of 2020 was due April 30th of 2020. So you have until April 30th of 2023 to file an amended 941, okay? That's kind of the basics of the 3-year rule. So you've got time, right? We've got some time into 2023. That's basically a year from now that we're looking at is when it's going to become no longer possible to file for these ERC credits. Second thing to point out is there's a worksheet at the end of the instructions for 941X that also has to be filled out in order for your 941X to be correct, okay? And what the worksheet does is it computes and I use these air quotes on purpose because they only have meaning to the government. They have no meaning to you. It computes the refundable and non-refundable portions of the ERC, okay? It's all refundable to you if you're going back and filing a 941X to claim a refund, okay? The non-refundable portion and the refundable portion are going to come to you in a check. Okay, all that does is it signifies for the IRS, the US Treasury, basically which bucket of money at the US government that your refund comes out of. Okay, it's purely for them. It does not affect what is actually refunded to you. Okay, so I want to make sure that's perfectly clear and understandable, because people see those and go, well, why does it say it's non-refundable? I don't know. It just is. The IRS made it that way, but it doesn't really matter. I promise you're going to get the full amount of the refund because my clients are seeing the full amount. Okay. The 941X has to be filed in paper. Okay. Snail mail, USPS, whatever, FedEx, if you want to use FedEx, it has to be, it cannot be filed electronically. Your 941 regulars are for the most part filed electronically, but this one has to be filed in paper. Okay. I don't know if you're aware of what's going on with the IRS, but they're way behind, way behind on processing paper. And the reason for that is that in 2020, when COVID hit, they shut down their processing facilities, right? Because processing paper is a manual job with people in a building. They shut down their facilities. They tried to do it at home. That's really hard when you're trying to process paper through a machine. So they got way behind and they have not caught up yet. The processing times right now on a 941X is up to 9 months. The first 941X that I helped a client file was in June of 2021. Yeah, June of 2021. He got his money last week. And that's the very first one. Now, they're not processing them perfectly in order because I know a company that filed last August that got their money in January. So it's not totally 9 months, but I want to make you sure you're aware that you're not going to get this money quickly. Okay. Once it is processed, the IRS is going to mail two things to you separately in the mail. They will not email you. They will not call you. Okay. They're going to send you snail mail, US Postal Service. The first one will be a notice of a tax adjustment. And that's just going to say, hey, we processed your 941. We've reduced your tax by this amount. Here's how much we're going to refund you plus interest. They do give you interest because they've had your money all this time. Here's the total refund you're going to get. And then secondarily, in a separate mailing, you'll get the refund check. It's a live check. Excuse me. You have to take it down to your bank and deposit it. So all this correspondence with the IRS for this is in paper. So just be prepared for that. I know I personally don't give as much attention to my mail as I should. I do this time of year, right, when I'm getting all my tax forms in the mail. But just be aware this is a paper process. Okay, this is just from the IRS. So IRS has this special website that basically explains to you all the things about why they're behind and how far behind they are. And they update this pretty regularly. I'd say every couple of weeks. The first paragraph here talks about how many 941s they have in process right now. This number goes up and down depending on where we're at in the quarter. So like all the first quarter 2021 941s, well, we're still in the first quarter. So the fourth quarter ones were due January 30th, right? So for the next couple months, their backlog is going to be huge, and then they work them down, and then the next quarter rolls around and they get huge, and then they work it down. The second paragraph is what I want to focus on is their total inventory of unprocessed Form 941X was approximately 391,000. Okay, that number has actually come down. At one point, it was close to 450. So it's good news. They were actually making progress on processing these 941X. They say not all involve a COVID credit. That's true. I would argue that probably most of them involve the COVID credit, which is ERC. And they are working them at 2 sites. That's true. I had a client get snail mail from both sites, Cincinnati and Ogden. So you can kind of check this if you're, have nothing else to do, and it'll kind of show you how they're making progress at the IRS. So one thing I wanted to, it's not in my slides, but I wanted to add is that the ERC credit is going to be income to you. Okay. So let's say you're working on your 2021 tax return right now, and you realize that you're eligible for the ERC, and you compute the ERC and you determine that you're eligible for $50,000 in ERC credits. Okay. You're excited, that's great. You prepare the 941Xs, you get them filed, you put them in the mail, knowing that you may not get your money for 9 months, okay? You still have to claim that as income on your 2021 tax return, okay? Because it's a 2021 credit. So the IRS put out a notice that says you have to claim the credit in the year for which the wages were incurred. Okay, so in this case, 2021, you have to put it on your 2021 tax return. The cash flow of that is terrible, okay? Because first of all, you're not going to see the ERC refund for up to 9 months, okay? But you're having to claim it on your 2021 tax return, which means your income for 2021 goes up, which means you're going to pay more taxes when you file your tax return or you file your extension, whatever you choose to do. So you have to pay that additional tax now, even though you're not going to get the refund until later. And that is terrible cash flow. The IRS is aware of that. They haven't offered any relief from that. The tax is still due. So it's something to be aware of, that you have to claim the credit on the relevant tax return. Now, what if you're talking about 2020? Okay. What if you sit down tomorrow and you decide, oh, I'm eligible for 2020, and you prepare the 941Xs and you claim the credit? Technically, you're supposed to go back and amend your 2020 tax return, okay? Amend the tax return, show the income on your 2020 return, pay the additional tax. So if you find yourself in that situation, you want to consult with a CPA, make sure you're getting all that right. It's kind of the downside, right? Like this was the happy conversation until now. And then we get down into the realities of what it does to your business tax return or your personal tax return, and it's not so happy and rosy. But you just need to be aware of that. That is how it works. And the IRS has been very clear on that is how it works. You can't claim the income in the year that you get the cash. They're very clear about that. So make sure you're discussing this with your CPA when it's tax prep time. Okay. Does anyone have any questions? I don't see any questions in the Q&A. I don't have the chat open. Robert, is there any questions in the chat or any other?
There's one question that popped up in the chat right now. It says, if you amend 2020 and are due a credit, it's just a comment, you will pay the tax of the 2020 return in 2021. Will there be a penalty?
Probably. Late payment penalty and interest. So, some consolation with that is that you are getting the ERC credit. So, high level, when you look at it in the global perspective, you still end up with more cash than if you didn't claim the ERC. But yeah, when you amend that return, it's going to cost you potentially some late payment penalties and interest. The interest you might get back in some ways because you're going to get interest paid to you by the IRS when you get your refund of the ERC. So the interest might wash out. But there could be some late payment penalties that you do have to absorb.
And then we had another question that says, can you explain the safe harbor rule?
I need more information on the safe harbor rule. Maybe someone can post more information when they're talking about the safe harbor rule.
All right, we'll see if Mario can
Okay.
put in the chat.
All right, I'm going to go ahead and move on, but I've got plenty of time for questions at the end also.
Okay.
Okay. So I know we're not talking about PPP loan forgiveness, but I just wanted to kind of pop in here and say, loans are not automatically forgiven, regardless of the amount of the loan. You have to do the work. You have to go through your lender. You have to submit the information they want. If you do not go through that process, it's a loan that has to be repaid. And the bad news is it's a loan that has to be repaid really quickly because the original due date for loans the first loans that were issued have a 2-year amortization period, which is coming up quickly. It'll be end of April 2022. So the loans that were issued later have a 5-year amortization, so there's more time to repay those. But this is not to automatically get forgiveness. It's easy to get forgiveness if you follow the rules and you just do the reporting. It's not hard, but you have to do the work in order to get the forgiveness. Like Robert said, you should really already have been done through the process of getting forgiveness for your first PPP loan. If you got a round 2 PPP loan in early 2021, a lot of our clients have already gotten forgiveness on their second PPP loan. Now that the lenders are familiar with how it all works, the process generally takes less than 30 days. And as long as you follow the rules and give the paperwork that they ask for, we're not aware of denials. I've had 2 clients that were audited that the SBA came back and said, hey, we just need more information. We don't think this matches to this, or what are you doing here? The client gave them additional information and the loans were forgiven. So it's a pretty, the process is meant to be beneficial to the recipient. What happens if you don't repay your PPP loan? Well, it's a loan from the US government that you defaulted on. So it could negatively affect your credit, both your business and your personal. The SBA may attempt to collect via withholding of any tax refunds that you might have out there. And then it may affect your ability to do business with the US government or get a US backed loan in the future. So, if you default on the PPP loan, the odds of getting an SBA loan in the future will be affected by the fact that you defaulted on the PPP loan. So those are just some things to keep in mind. All right, Robert, did that question pop up on the safe harbor?
Yeah, so they referenced using the prior quarter to calculate eligibility.
Okay, so I'm going to pop back to that slide because it's probably easiest to look at the slide. Okay, so that is only for the gross receipts test, and it's only for 2021. And you can see in this example too, this business had gross receipts that were 90% of 2019 in the first quarter. But if you look back to the fourth quarter of 2020, they were less than 80%. So Q1 becomes eligible because Q4 was less than 80%. And you can push this forward multiple quarters. So like, let's say Q3 over here. So let's add a Q3 column over here in this blue space. And let's say Q3 gross receipts were 150% of 2019. Okay, so your business came roaring back and you had a fabulous quarter in Q3 of 2021. Q3 is still eligible because of the look back to Q2, because Q2 is less than 80%. It's at 75%. So you'd look at each quarter on its own to see if they pass the test. If they don't, you look at the previous quarter and see if that previous quarter passed the test in order to make your current quarter eligible. So it's kind of like a 2-step test. Like on the spreadsheet that I developed, that's kind of how I did it. It's a 2-step. Is this quarter eligible on its own? Yes or no? Look back at the previous quarter. Would it be eligible? Excuse me. Yes or no makes this quarter eligible or not eligible. And that's in IRS notice 2021-23, I think, this alternative quarter election. And it only applies, like I said, to 2021. It is not applicable to 2020.
Okay, and then we have another question.
Sure.
Can you touch again on, it says, can you get the ERC if you received a PPP loan?
Yes. The restriction is you cannot use the same wages to claim ERC that you reported and used on your PPP forgiveness application. Okay, so you have to really categorize your wages kind of into buckets. You've got the bucket that's, before your PPP loan, you've got the bucket of wages that was paid during your covered period, and then you've got the bucket of wages that was paid after your covered period. And you kind of have to break all that down and say, okay, how do these wages interrelate with my eligibility periods? And there's a lot of heavy math you can get into, because if you really get into the IRS notice, you could almost kind of get a do-over on your loan forgiveness application. So if you're getting really, I would consult with someone who's an expert in ERC if you're trying to retroactively claim, if you want to maximize ERC and PPP. because you can actually steal some of the wages from your PPP loan forgiveness application as long as it does not affect your forgiveness. And that's IRS Notice 2021-20 goes into the details on all that, on how you do that. But like I said, the math gets heavy, but you for sure cannot double dip on wages. You can't use them for PPP and ERC. So, okay.
All right.
Anything else, Robert?
Another question says, is there an ERC filing deadline?
So it is it falls back to the quarter of the 941 that you're going to amend. So the earliest quarter that would be amended is Q2 of 2020. And the last day in most cases that you can amend the Q2 of 2020 is going to be April 30th of 2023. So there's a 3-year period that you can amend a 941. So it really drills back to the 941. If you're, let's say you're just eligible for Q1 of 2021, that was due April 30th. No, that's right. April 30th of, well, I got that backwards on Q2 of 2020. Sorry, that was due July 31st. So you have till July 31st of 2023. Sorry, I got my dates mixed up. If you're just eligible for Q1 of 2021, that form was due April 30th of 2021. So you have until April 30th of 2024. So it's 3 years after the original due date of the 941 that you're amending. Okay, so there's not just some magical date that's all ERC has to be filed by. It's tied directly to the 941 that you're amending.
Excellent, great questions. That's it for the questions right now.
Okay.
I know you have a few more pieces you can cover.
Yep,
before
so
we wrap
I've
up.
got bonus material, and it's probably not as exciting as like bonus material at the movies, like when you get to see cool previews of the movies that are coming. But it is bonus material. So with the caveat that I'm not a tax person, I know that's kind of crazy, right? I just talked to you about tax credits, but I'm not an individual tax preparer. But my friends at work said I should tell you all about these things just so that you're aware of them. Not that you necessarily understand them and know how to calculate them, but you can be aware of them when you go to file your tax return. Okay, so you're probably all aware of Prop 208, which added this 3.5% surcharge to individuals on their taxable income above 250 or 500. There's also Senate Bill 1827 that establishes a combined tax rate cap of 4.5% that tries to mitigate that effect. And then there's another Senate bill that comes into effect in 2022 that's also trying to create a flat tax rate for Arizona individuals. This is all just on your Arizona individual return. This is not federal. And then the last thing is this House Bill 1783. And I want to focus on that, and because it's a way for people who have small businesses to mitigate that Prop 208 effect by filing a form that taxes your small business income separately. Okay. And so this may not be of benefit to everyone, but it's something to be aware of, that if you do have a small business, there may be a way to reduce your tax burden by filing this form 140-SBI. Okay. And what what it does is you make an election every year by filing this form, and basically you pay your share of income tax on your business outside of your individual tax return. Okay, and to be eligible, you just have to have one of these types of income on your federal return, which is pretty much almost everything. There's very few people who don't have at least one of these things. But especially small businesses, you're probably going to be here in the second bullet, profit and loss for business on Schedule C, or let's say you have an S Corp or a partnership that pays tax as or an LLC that pays tax as a partnership. You're going to have this Schedule K1 income. If you're a farmer and you have Schedule F. So if you have any one of these income sources on your return, it's possible that you might be able to reduce your income tax burden in Arizona by filing this form S140 SBI. Okay, and these are just kind of some basics. If you file an extension, the extension also applies to the SBI form. If you need to make a payment of tax, there's a special form for that called 204 SBI. You don't have to make any estimates for this year, right? Because it's the first year of this tax. Going forward into 2022, it'd just be like all the other taxes that you pay on small business income where you need to pay quarterly. But that requirement is alleviated for 2021 because the bill just passed. Oh, this is all about things that are way too complicated. Here's the form, and it kind of just shows you how it works. But I don't really want to focus on all the details. The highlight of it is if you have a small business and you file Schedule C or you get a K-1, you need to talk to your tax preparer and say, hey, can I get a benefit by filing this Arizona SB, what it was, 140-SBI, okay? That's really all you need to know from this, is to just be aware that it's out there. Okay, any other questions?
We have one question, which is a great one to wrap up with. It says, what is the best website for ERC information?
Oh, wow. That's a tough question. The IRS has a Q&A that's out there, but it is super technical. It has 96 questions and answers, and they're super technical, and they're probably mostly written for tax professionals. They act like it's written for a regular person to understand, but it's really not, because it's so complex. I saw some decent information on the QuickBooks website, but there's really not a lot of resources out there that walk you through all the different pieces. You could go back to, like I said, in the content archive on the business bootcamp and look at the presentation I did last June. It gets more detail into the math of how it all works. But it's just a lot. I mean, I honestly would recommend consulting with a CPA or an ERC expert, and not all the CPAs are up on it. You know, we have the resources that we were able to segregate a group of people to become experts on all these things. You know, not all practitioners have the time or the resources to be able to do that. So, you know, when in doubt, when it gets complicated, and it does, and seek out the advice of a professional to help you.
All right, great, perfect answer. I encourage you to do the same. Thank you, Carrie Ann, for being here with us today.
You're welcome.
We appreciate it. I see that Cindy Scott, from our friend from the SBDC, posted the IRS website on it. So thank you, Cindy, for doing that in the chat. So, but Carrie Ann, thank you for being with us today. We appreciate your time and your expertise. We always love having you on our boot camps. You do such a great job. So thank you. For all the participants, thank you for attending today. We're glad to have you with us, and we hope to see you next Tuesday for R&D tax credits, so you can learn about how you might be able to get some of those tax credits in your taxes this year. So with that, we will go ahead and wrap up, and we hope to see everybody soon. Thank you, and have a great day.
Bye.